Hello, everyone. Good morning from this part of the world, and depending on what time zone you're tuning in from, good afternoon and good evening to you. And I'm so excited to welcome you to the final trading day of the week, and we all know what that means. Markets will begin to start rounding off their trading activities ahead of the weekend. And from experience, we do understand that Friday's trading session are special, as market are expected to slow down just enough to reveal its true intention, and the psychological expectations become clearer as the week rounds off. So it's that moment where momentum will either confirm its story or the market quietly prepare for a reset, going into the weekend, and of course preparing for the upcoming week. Um, all week we have been tracking the GBPUSD, the USOIL, the USDJPY, and the gold commodity done fairly well across these assets since the beginning of the week. And each one of them is now sitting on an interesting setup that's finally starting to unfold on the chart. So if you are a fan of any of these assets, I encourage you to stay locked in because today is where we are going to be looking at the bigger picture, looking at how the market has digested the fundamentals, see how it has reflected on the chart, and of course, use that information to strategically position ourselves for the next move. Now, before we go into the US dollar market dynamic, of course, we do want to understand what is going on in the US dollar environment. I would like to welcome newcomers in the house who are just joining us for the first time. My name is Sheriff Daramola, and for the next 30-40 minutes thereabouts, depending on how soon or later we end the session, um, my My name is Sheriff Daramola, and of course, I'm going to be taking you on a trading journey where we shall be evaluating the market together with the intent of understanding how market are thinking, and of course, use that information to guide our trading decisions today. So with that said here, let's dive right into the chart. And of course, what you see on the chart is the DXY, that is the US dollar index at the 4 hours time frame, right? And okay, sorry, this is the USDJPY. So let's go to the DXY. They almost look similar when we consider the character of price action. Okay, so here we are on the 4 hours time frame of the USD JPY, and hold on a second, please. Okay, so from what we see here, it is quite obvious that price has finally broken down that ascending trend line we marked out here. I remember we have been using this ascending trend line in the last 2.5 months. This started in mid-September, and of course, we've seen that price action has finally broken down that structure. And so, what this simply means is that since the week began, buyers have never had any chance to push above the trend line, as every attempt you see here was met with strong resistance from sellers around the $99.75 level, which of course was as a result of majority of market participants um, considering that the Senate court is um, sign, sealed, and deliver. So this initial idea and of course the data blackout pushed traders to start taking profits on the dollar long position, and this of course went on to lift risk appetite. So technically, price has lost the ascending trend line that had been supporting the bullish structure since mid-September. Now, with the way things are going right now, are we going to be expecting in the coming week? Now, if we zoom into the structure, we will notice that despite the strong bearish move, we saw that as soon as price dropped into the $99 zone, we began to notice some buy pressure resume again. And this was around the third to fourth hour of the New York session yesterday. And I'm beginning to think that this bullish scenario we're seeing here could be the Fed official speeches through the course of the week, where they went on to um, um, increase the narrative that interest rate cuts in December is not guaranteed. And I guess this is giving the dollar a temporary hope. As you will see, we've saw a couple of hammer candles showing that buyers may likely be coming back into the market. What into the market is more or less a short-term recovery that might see price come back, retest both the $98.50 level and the trend line that was broken to insights another wave of bearish move, or is it going to go ahead and climb back above the key level and the trend line for an uptrend continuation? So this is where we are at the moment, and of course with the Fed cuts oscillating, that is, markets now pricing roughly a coin flip for December, we expect choppy, range-bound moves, um, which will support a slightly weak dollar, while price trades below the broken trend line. But any fresh hawkish Fed talk or stronger than expected US data could trigger a quick snapback above the structure. Now, let's look at the economic calendar to see what the market will be eyeing to decide their trading decisions today. Are there any high impactful events to look out for? Now, right here on the economic calendar, we are going to Friday, right? Okay, so we do have the producer price index. This usually comes in around 12:30 p.m. UTC, but the time is not available at the moment. I guess probably this is a sign that we may likely not see this report released due to the shutdown in the US government. But the timing still remains around that time. Producer price index and retail sales data. Will it come up? Well, we don't know yet, but we shall continue to monitor these activities and see if they really come up or not. If they do come up and the data comes in higher than the previous month, it could give the dollar some room to thrive. But if it comes in lower, then we could likely see sell pressure persist below this trend line. So that is basically the idea around the US dollar. And from a sentimental perspective, it is clear that the market is bearish at the moment, except if the buyers take over the market at any point in time from now. So moving into the assets we are monitoring for this week. So the first one we are going to be looking at is the USD, sorry, the US crude oil market. And we saw something interesting happened. I was able to capture that bearish move. Remember, we had the setup on the 15 minutes time frame, which gave us that opportunity to ride this move below the key level. About the 120 pips was caught there before price action came back again, before buyers came back into the market. And with what I'm seeing here, it's looking as if the market has come back to retest this descending trend line. As you will see, when price came in here, we saw a sharp rejection followed by a bearish candle showing us signs that sellers may likely be coming back into the market to push price further to the downside. And from a fundamental perspective, I want to say that the recent surge we saw here yesterday could be attributed to Ukraine's drone attack on Russia's port, which of course sparked fresh supply concerns across the oil market. Okay. Then additional support came from the upcoming US sanctions, which could disrupt Russia's oil export and leave many barrels stranded at the same time. However, if we look at the IEA's warning of a growing supply, um, which continues to limit the upside, I'm beginning to lean towards a bearish scenario here. And if price continues to trade below this key level, which was a support line for the last 2-3 weeks, if price continues to trade below that structure, I will feel more confident being in a sell position. Now, with rising output from OPEC Plus, the US and Brazil also adds to the oversupply worries and keeps this bearish pressure in the market. So to help me navigate this market today, we'll be going back down into the 15 minutes time frame. So this is the 15 minutes time frame. That's the key level right there. Whoa, what a big key level we have. So let me just reduce it and bring it back into the frame of the structure. And this is what I was able to come up with this morning after monitoring what has been going on here in the last 4 to 5 hours. Price falling into a range confined within a $10 range bound structure that is between the $49.45 level and the $59.65 area, just exactly around that key level. And you know how we use our range bound whenever we identify them, we wait patiently for price to either break out the resistance line to give us an opportunity to buy or break down the support line to give us an opportunity to sell. And from what we can see here in the last 3 to 4 hours, we can see price breakdown, retested the support line, and it's at this point I decided to place a sell position on the US All Sports, as you can see here. So I already have a sell position triggered, though running with some small profit, and hopefully this momentum continues to the downside. So if we look at the sentiment, the fundamental factors, all of it is lining up with what we are seeing on the chart. Hence, I maintain a bearish bias here. Now, in case the market shifts, and buyers come back into the market, I will not consider buying unless we see a breakout of this range, and not just a breakout. I want to see price do a retest of structure, confirming that buyers are strong now, and then I can join the uptrend move above the $59.65 level. Now, if at any point in time this happens and triggers a buy position, please let's be wary of this descending trend line here. Remember, it has been supporting that bearish move for the last 6 weeks. And so if price moves into that area, that's about 30-35 pips, move all stop losses, secure this buy position, and let's wait and see how the market reacts to the trend line. If it breaks out of the trend line, then that will welcome more buying opportunities. But if buyers find it difficult to break through, sellers persist there, maybe price evolves into a reversal setup, then we can sell the breakdown of the neckline of that reversal setup. So that is what I'm looking at the moment. I lean strongly bearish at the moment. Let's see how the market plays out from this particular area. So if you want to be part of this with me, back at the structure and let's use it as a yardstick to guide our decisions today. If you have any question, feel free to let me know in the comment section. So I will be checking the comment section from time to time to see if there are any inquiries. So while I wait for your inquiries, I will be moving on to the next instrument on our watch list, and that is the GBPUSD. All right. So we talked about this on Wednesday, and in fact, from the look of things, price, the market is very, very indecisive. So the week started somewhere here. I remember we had our key level at the 1.314, just right here. I bought at the beginning of the week, but that position did not do very well as I got taken out. The same thing also happened on Wednesday as well. You can see the market did not really move in one particular direction. Instead, the market has been very choppy, confined within a range bound, and the fact that price is still coming back into that 1.314 key level identified at the beginning of the week further emphasize the importance of this rise level. And I have a strong feeling that it's from this point that we are going to be seeing a massive move. Is it going to be to the upside or to the downside? Now, generally speaking, if we look at things from, let's say, since mid-September, it is quite clear that the pound is under pressure. The trend line here emphasized that after connecting the series of lower highs. And this whole pressure continues to be supported by concerns about the UK's fiscal discipline and political stability. The government's decision to drop plans to raise income tax rates has raised doubt about how it will cover its budget shortfall. And with weak economic data from the UK, the expectations of Bank of England rate cut in December hereby increases. And of course, we know what that means. The pounds become less attractive for investors and further supports the downside pressure. Um, but in as much as this is the case, I want to us to take note of the fact that the downside pressure again could be partly cushioned because the US dollar is struggling amidst uncertainty caused by the recently ended government shutdown. Okay, so in as much as the pound is looking weak, the dollar too is not really doing very well. And this further explains what we are seeing on the chart right now as price continues to oscillate just right around that key level at the 1.31400 area. Now, to help us navigate this structure today, my structure here still remains this. For those of you who are with me on my Telegram and TradingView platform, remember I shared this update with us this morning with this new structure here, where I was able to spot a range bound structure as price remained confined within the 1.316 and the 1.3127 in the last 12 to 15 hours, right? And at the time I shared that position, that commentary, I had a sell position triggered. Unfortunately, that position did not do well. As you can see, It got triggered, and then we saw this massive move all the way to the upside, taking out that sell position. And this move is so massive that it cuts through that range band. Look at that engulfing bullish candle here. And for me, this is not an ordinary one. So let's look at the economic calendar to see if there are any events from the UK, none recorded here. So as you can see, the market is really shaky, and I'm beginning to consider not trading the GBP USD today based on what I see here. So since the beginning of the week, I've not really taken anything out of this market. I had a couple of losses on the GBP USD, and with what happened today, I might be staying clear of this market as it appears that the market is not really having a particular direction to go. So under serious pressure, like I said, the dollar too is not doing very well. So we may likely be looking forward to next week's economic data to decide the fate of these assets. So that's what I will be doing. I think I will step aside from the JP USD today after taking this loss this morning, and then come back next week to see if we can recoup the losses we incurred this week. So that's my view on the GBP USD. If you have questions, feel free to let me know in the comment section. Let me know your thoughts too, as well as how you intend to trade this if you are willing to trade. You know, I don't do short-term trading, so I usually look at things from a long-term perspective, and for now, I'm not really sure I can pinpoint something at the moment. But if you do, let me hear your perspective. I'll be really excited to hear your view on the GBP USD. So moving on, I will be waiting for your comments. So moving on to the so moving on to the next asset on my watch list for the week. So please hold on a second. I want to pick a call. I will be right back. All right. So the next one we are looking at is the USDJPY. That is the US dollar against the Japanese yen. And I've done pretty well on this asset since the week began. Remember, we have been buying the USDJPY after, for those who watched my weekend market analysis on this asset, remember we spotted an ascending trend line which captured the character of price action since the beginning of October. That's the pink line you see here, And throughout this week, we can see how the market had continued to respect that trend line, isn't it? We saw this range bound, and remember, we bought right above the structure, above the 153.400 level. We saw price move about 100 pips thereabouts before retracing back into the trend line. And then on Wednesday, we had a simple setup as well, which also um, didn't really bring out anything from the market. And this trend line here that is being maintained further emphasize that the yen remains weak, especially after the prime minister, that is the new prime minister Takaichi, um, mentioned a preference for low interest rates, and this further reduces expectations of a near-term Bank of Japan rate hike. However, the verbal warnings from Japan's finance minister have also raised intervention fears, offering some limited support for the USDJPY. And when there is this narrative of Bank of Japan intervention, there is always this profit taking activity that comes up, which is something we are seeing right now. And we could see price break down that ascending trend line. Now, the fact that the US dollar still remains soft due to economic concerns linked to the long US government shutdown, the overall scenario here is still looking bullish considering the fact that price still remains above the ascending trend line. So if we look at this market, it is more like caught up between Bank of Japan dovish signal and then intervention risk, creating mixed sentiment in the market. Okay, so if you would ask me personally, I think that the momentum is still bullish since price still remains above the ascending trend line, and I will only consider selling if I can see a breakdown retest of the trend line, looking at things from a long-term perspective, of course. Now, to guide my decision today, new structure this morning after capturing the character of price action. Now, look at this. Let's look at what had been going on here since the first week of November. For those of you who are with me on Wednesday, remember this was the ascending trend line we marked out, was our primary ascending trend line on Wednesday, but things have shifted after price broke down that trend line. So my primary ascending trend line today is this thick blue dotted line on your screen. Now look at the retracement that happened on Wednesday. Um, as uncertainty around back of Japan intervention came in, and look at what happened. Despite the strong bearish move, the trend line was able to hold the momentum. Price came back again. In as much as it remained consolidating during the Asian session, we can see higher lows and higher highs. Now, zooming into the structure, we have a range bound where I was able to execute a buy position at the break of this resistant line at the 154.650. Now, this resistant line here also lines up with the trend line that supported the bearish move since that Wednesday's trading session we talked about here. So you can see price has been respecting that trend line. As soon as price comes here, price goes down. Same thing also happened during the Asian session here. And right now, price is back into the structure. So the question going into today's session is whether price will respect it again, or we are going to be seeing a breakout retest of structure, which is looking more likely considering the fact that price still remains above the ascending trend line. Okay, so sorry, the descent, yes, ascending trend line. So I had to buy there, and then hopefully that momentum will continue to the upside. Now, if the fears of Bank of Japan intervention continues to be the order of the day, that means sellers come in. I will not be selling unless this 150 breached and broken to the downside, as this will confirm that sellers have finally come into the market. So that is what I'm looking at on the USD JPY going into today's trading session. So let's see how the market is going to play out from this area. The range bound here continues to be my structure guiding my decision for today's trading session. So I will be moving on to the final asset on my watch list. If you have questions, feel free to let me know in the comment section. So moving on to the final asset on our watch list for today, and that's my favorite amongst them. That is the XAUUSD. Now, the gold commodity, we have been buying the gold since the beginning of the week as price continues to recover, right? And at the moment,